My portfolio has officially crossed over $13,000. Hello, my name is Jack Murphy. This is the 47th Dividend Income Report video where I go over what stocks pay me dividends, my best and worst performers, and what stocks I've been buying and selling. So today we're going to keep it pretty simple. It's January. My portfolio has hit $13,000. I'm going to talk about my dividends and what changes I'm making to them in the future. So let's get right into it with the portfolio's performance. If we look at January, my portfolio actually outperformed 3 indexes. I had around a 2% return. The S&P had about a 1.45% return. The NASDAQ had around a 1% return. And the Dow Jones almost got me at a 1.8% return. So pretty good start to the month. But if we look back to the old recomposition I did last March, it doesn't look as good for me. My portfolio has performed about 14% since last March, and that has underperformed the S&P 500, which had around a 21% return, severely underperformed the NASDAQ, which is almost at 30% since then, and is pretty close to the Dow Jones at around a 15%. This is because both those indexes are heavy in tech, and AI and tech boom has done really well in the last year. Now in my Roth IRA, I got a lot of exposure to the S&P and the NASDAQ, so I did pretty well there, but this portfolio did lack a little bit. I usually also talk about year to date, but that's just January, so we're not going to do that now. And we can move on to my best and worst stocks this month. So if we look at my best and worst performers, I got some big winners and big losers. We'll talk about the winners first. The first one was Outro Group at over a positive 7% return. Then SCHD also had a pretty big comeback at around 7%, pretty close to all-time highs. Remember that drop a couple months ago? Told you not to worry about it and buy the dip. It has done pretty well, so good there. And then obviously the biggest return in my portfolio was Chevron because of the stuff in Greenland and the Middle East is affecting oil prices. So my Chevron position is up a lot. Might be something I consider exiting soon. I'll talk more about that later, but Chevron is up 16%. My worst 3 positions are JP Morgan at over a negative 5% return, Visa at over a negative 9% return, and Microsoft at a staggering negative 11.87% return. Just to give an explanation of what's affecting these prices, JP Morgan got affected by some credit card cuts that could be potentially happening, which would limit the amount of interest credit cards can charge. So that hurt JP Morgan. The same with Visa, because Visa is specifically for credit cards and transactions. So that credit card limitation also really affected Visa. And Microsoft didn't have as much growth for their cloud, Azure, as people were hoping for. So that kind of hurt its price, along with AI just pulling back altogether or all around. So Microsoft got hit pretty hard. I think was an overreaction. I bought a little bit. I'll talk about that later. Or actually, I'll just talk about that now. What stocks did I buy and sell? I bought Regeneron and Microsoft. These are both stocks I know I'm going to want to keep from the next recomposition, so that's why I bought into them. Both were on a discount, so I bought around $125 each, making my total contribution for the month $250. So good month in contributions. Here's a look at my Microsoft position. Pretty much break even, but we have accumulated a good amount of Microsoft shares. And here's my Regeneron position. Very, very close to being break even. We touched break even last month, so I'm just going to keep dollar cost averaging into Regeneron. Very bullish on this company long term. Got a lot of good drugs in development in the pipeline. It's a biotech company. So I'm taking this time to always dollar cost average into it. I think I've probably done every single month for the past year, which is more than any other position I have. So that's the deal with Regeneron. So now we can look at my dividends. In the month of January, I got 3 dividend payments. The first one was Outro Group, where I got $18.79. Then I got my monthly payment from Realty Income of $5.46. And then lastly, I got $7.29 from JP Morgan, bringing the total for this month to $31.54. Not a bad start to the year at all. To give a quick peek into next month's payments, I'm only going to get a payment from Realty Income, so it's going to be a bad month for dividends, but that's not going to be the main focus of February. February is when I want to execute my recomposition. I'm going to take out some stocks, put in some new ones, and kind of think more long-term growth opposed to dividends. I'm not cutting out dividends. I definitely want to keep my SCHD position and some of the other dividend payers in my account right now. But that's probably going to be a big thing in February, I'm going to make a video probably around the end of the month, talk about my portfolio recomposition, and talk about all the changes and why I made them, and then kind of talk about why I'm going a little bit less heavy in dividends and a little bit more heavy on growth. Short story, it's because I'm young and have a lot of years to invest, but I'm going to talk about why I'm still going to keep dividend as a partial focus in my investing. Until then, you can watch the 2025 recap video I posted at the end of 2025. It talks about both my Schwab portfolio and my Roth IRA and my overall investments for the whole last year. So that was a great one. Thank you so much for watching. Peace.